silver will respond in a very bullish manner because it's such a highly used industrial metal. When the correction is over, I expect silver to take out 54.40 and absolutely go to 55, 56 and beyond. My son, who's an excellent technical analyst, for months has been calling for $60 silver, and I'm going to take his call because he's really good at what I do. This market is based on fundamental drivers. So rate cut, that's bullish. A successful trade talk with the president of China and Trump, that will affect the market. That will not be bullish because that tends to bring gold down.
Market veteran Gary Wagner, a respected technical analyst and longtime precious metals commentator, believes silver is setting up for a powerful move once the current correction runs its course. According to his analysis, silver's dual identity as both a precious and industrial metal positions it for outsized gains in the next leg higher. Wagner notes that silver is uniquely tied to industrial demand, from solar panels and electronics to green energy applications, making it far more sensitive to economic recovery trends. When this correction phase ends, he expects silver to decisively take out the $54.40 resistance level, pushing toward $55.56 and beyond. Some projections even suggest a potential run to $60, supported by strong fundamentals and technical confirmation. He also points out that macroeconomic factors remain critical drivers. A potential rate cut from the Federal Reserve would be a major tailwind, fueling demand for hard assets. However, successful trade negotiations between the U.S. and China could have the opposite effect, as reduced global uncertainty often tempers precious metal prices. Overall, the stage appears set for silver to shine once the correction stabilizes. Investors watching the metal's technical levels may soon witness one of its most dynamic rallies in years. If you found this analysis insightful, don't forget to like, subscribe, and comment below with your price targets for silver.
I believe there's a high possibility it could go a little lower. I was hoping to find support at the 38.2%. That would be a real shallow correction, but realized that when we got a signal from a weekly chart, it would give you different numbers altogether. So my sense is that if it does continue lower, 38.72, that is just a 50% retracement. And you see that a lot in stocks. They move up $2, they come back and correct $1. The big one for a deep correction is a 61.8% correction, and that would take gold to 37.48. But traders, here's the good news. For those that know my technical studies that we use, this rally, in terms of an Elliot wave count, this is all wave one. And we are now, I believe, in a wave two scenario. And when that ends, and it will, I'm still really bullish on gold. When that ends, whether it finds support here, which is less likely, or around 38.70, 37.48, in other words, wherever it ends, then we're going to start a third wave, primary third wave. These are primary waves. And a primary third wave, by its definition, is never the shortest of the impulse waves, which means it could have this kind of move again. One thing we do know is if we do get a third wave, as I believe we will break 4,400 again and head to new areas that we have never seen before. 45, 46. It's just exciting. And my idea about this correction is it's been long overdue. Yeah. I mean, look, we've never seen, we have seen, but very, very infrequently, this kind of move from 33 to 43 is $1,000. And then it goes above that by a little bit. So $1,000 rally is not what we're used to. And that's what this was. When you consider I marked the beginning at 33.48 and it trades to 39.95, that is a huge move. And because of that, that's why I think this correction could continue to go on. But realize that ultimately, this market is based on fundamental drivers. Silver tends to outperform on the upside when gold and silver are moving higher and overperform on the downside during a correction. That's what we didn't see. Silver's been really almost head to head in terms of percentage gains through the rally. Now, this rally here, as you can see, I'm putting from July with silver at 36.30 and the top at 54.51. And when we look at it, I don't know why, but I should, let me add, that doesn't matter. You can see it broke through the 23.6 like a butter knife. Look at the size of this move. You got the same kind of dojis or small body candles last week on the same date. And then you had a significant drop as we did in gold yesterday. But look at today's candle. It's actually a small body candle with a long lower wick, which could become what's called an umbrella line or a hammer. The same with gold, but it's green. It's actually above its opening price. So silver wants to run.
Yeah.
It has been behind gold. Gold was making, I don't even know how many all-time new price highs over the last year. I mean, it's a huge number, a double-digit number, but silver wasn't. But finally, silver broke above $50, and that would have occurred on Monday, the 13th of October, ran as high as 54, and now it's correcting. And if you look, this low is kind of near the 50% retracement. That's a possibility of finding support there. Again, that would have if there's a positive move forward in the trade negotiations between China and the U.S., the drivers that have been driving gold, I believe, will continue to be present in the market. And after this correction is over, we will go to a new level we have not seen before.
Renowned market analyst Gary Wagner believes that the current correction in gold isn't a sign of weakness, but a healthy and necessary setup for the next major leg higher. According to his technical analysis, gold may continue to retrace, potentially finding support between $3,748 and $3,870, aligning with the classic 50% to 61.8% Fibonacci retracement levels. Wagner explains that what we're witnessing now fits into a broader Elliot wave pattern. The recent surge from $3,300 to above $4,000 marks the completion of Wave 1, and the ongoing correction represents Wave 2. Once this phase concludes, he expects the powerful Wave 3 to begin, a move that could drive gold beyond $4,400 to potentially new record highs. He also highlights silver's resilience, noting that while it usually lags during corrections, it's shown surprising strength this time around. Technical signals, such as hammer candles and lower wicks, suggest buyers are already stepping in. Despite short-term volatility, Wagner remains confident that both metals will soon reach levels we've never seen before. Now let's get into the interview.
Inflation is at 3%. Typically, the Fed would not cut rates when they have an inflation level of 3%, but I expect a rate cut. So there's a lot of nuances in what it takes for the Fed to make their decision. I think we're going to get an atypical decision, meaning a rate cut with high inflation, but we'll have to see what happens. Chart numbers do not move the market as much as we want them to. They show you possibilities, but fundamentals control price action in the market. So we want to look at the fundamentals first and get a sense as to how those fundamentals could affect gold or silver or soybeans if the deal goes through where China starts buying our soybeans. Those are the fundamental things that will make these markets move great. An announcement that Trump managed to get an order for a lot of soybeans is going to make soybeans go up tremendously. Has not a thing in the world to do with the chart. So I always believe fundamentals are the core reason a market moves, but there's so much noise in figuring it out. And I became uncertain as to what's going to be the primary catalyst. And I looked at a chart. Oh, it's clear. So yeah, fundamentals move the market, but analysis of charts combined with that, I believe, is probably the best way to analyze market. If the correction is hopefully more shallow than it could be, it's going to go to a primary third wave. It will take out the former targets I have, and that's where these new targets will come in. Because if this correction actually runs its course, rather soon, meaning the next even end of the month. October's almost over. Middle of November, it could easily go and challenge these new levels based upon the fact that it's in a primary first wave. And that, of course, would update my targets higher than they were originally. And the way I look at it is the targets we put out got hit. Then we got a correction. So it's exactly how we're seeing it play out, in that I didn't expect $1,000 rise in gold or the kind of rise in silver. But when that is what unfolded, I realized that in the case of both markets, whatever you want to do, even if the fundamentals want to move it higher, it's an overbought scenario and profit taking will come in. That was the primary impetus that took gold and silver lower, that broke everything. And so it was way, way overbought. I think we did 30% in 4 months. And it really went to levels that I was looking for in both gold and silver. And we also believe that there's going to be a correction when it hit those numbers. And that actually came due.
Market analyst Gary Wagner believes that despite lingering inflation and uncertainty around Federal Reserve decisions, the gold market's next major move will be shaped by fundamentals, not speculation. With inflation holding near 3%, Wagner points out that a potential rate cut would be unusual under normal economic conditions. But current circumstances are anything but typical. He explains that while chart patterns help identify possibilities, it's ultimately fundamental factors, like trade agreements, commodity demand, and central bank policy, that drive lasting market shifts. For example, a successful trade deal increasing U.S. soybean exports could send agricultural markets soaring, much like how macroeconomic policies can move gold and silver. Currently, both metals are in a corrective phase following an overbought surge that saw gold rally over 30%. Wagner views this pullback as a healthy reset, paving the way for the next primary third wave higher, which could take prices beyond previous targets once momentum rebuilds. The key, he emphasizes, is patience and balance, understanding when profit-taking ends and real value emerges again. If you enjoyed this insight, don't forget to like, subscribe, and comment below with your thoughts.